Welcome back. You're watching us here on a Halftime Report. Good time to get in what the action in the F&O space is indicating at midday. It's been a good day so far. In fact, at the start of the show being the mid-cap index. Of course, on Friday, it had seen a brutal sell-off. And now as we speak, almost 770 points for that index would imply that a 65% recovery is what we've seen at an index level for the mid-cap index from Friday's loss. And the intraday chart of the Nifty, as well as all the other indices, would indicate that, we opened mildly in the green. There was a very small dip. That dip has been bought into, and we saw this big move. And now the bulls and bears are jostling around that 18,000 for the Nifty itself. Can the Nifty sustainably cross that 18,000 mark is a question that we don't have an answer to right now. But what it has done is it has given bulls some support and some confidence to go ahead and write a lot of puts. So 17,800 put, which on Friday saw just around 15 lakh shares being added in open interest, has now added a lot more. Almost 43 lakh shares added in open interest for the 17,800 put. 17,900 put too has seen a fair amount of open interest addition, almost 42 lakh shares being added out there as well. So that's telling you that, today's low of just around that 17,775 mark could be an important support to watch out for the expiry week. However, 18,000 call writers still haven't given up their hope. In fact, we've seen around 13.5 lakh shares being written on that counter as well, and it already has 1 crore shares outstanding in open interest with a premium of 100 odd rupees. So that's telling you that levels upwards of 18,050 to 18,100 may face some sort of resistance. The Nifty put-call ratio saw a bounce back from levels of 0.7, now is at 0.91. So the question is, where does it go from now? The Nifty is above the 100-day moving average, the Nifty Bank above the 50-day moving average. So those levels would be important supports to watch out for as well. But that's as far as the indices are concerned. Jay Thakkar now joins in with a couple of stock picks. Jay, we are seeing some recovery. What kind of stocks do you like right now?
Hi, very good afternoon to you, Mangalam. Well, yes, this is a good bounce that we are seeing. I mean, from the oversold territory, and Bank Nifty, the way 42,000 is acting as a very crucial support, and is clearly visible from the derivatives data as well. I think it's heading towards 42,500, 42,800 range. That's Bank Nifty. Hence, I have one buy recommendation from the Bank Nifty, or I would say from the banking pack. And Nifty too seems to be definitely 18,000 is a very crucial resistance as of now. So we can see some profit booking from those levels. The correct level to enter on Nifty for having a good risk reward would be 17,900, Mangalam, and 17,800 would be as a acting as a very crucial support. And if Bank Nifty is bouncing back to 42,500, 800, then Nifty can extend its rally till 18,100 to 18,200 zones. But then Nifty's buy on dips, Bank Nifty can be bought at current levels as well. The first buy recommendation is on ICICI Bank. Since I think the bounce on Bank Nifty can continue as well, so one can buy at current levels or on dips. The current market price of ICICI is at 886 of the spot levels. I'm expecting a bounce until the levels of 905 to 915. So one can buy for these two short-term targets, and one can place a stop loss below 870. So that's the first buy recommendation on ICICI Bank. And the second buy recommendation is on Apollo Tyres, which is trading around the levels of 319 on spot levels. I mean, the stock had provided a very nice breakout from a consolidation of 300 to 250 range, and it has retested that breakout levels. Hence, I would say that it's again a buy Apollo Tyres for a target of 340 to 355. These are his two short-term targets, and one can place a stop loss below 310.
All right, Jay, thanks a lot for joining us. With that, we'll slip into a short break. Up next, we'll connect with Shweta Jalan, Managing Partner and Head India at Advent International, as they acquire stake in